Hello guys, welcome to the Solid as a Stock session. Let me just get these chat boxes up so I can see you guys as you come in. If you are on the chat boxes, say hi, say hello, let me know that you're here and that you hear me and things like that. Now, what we're doing today, hopefully clue is in the name, we are looking at stocks. Now, it will depend on whether you are watching within the closed coaching community or whether or not you're watching on YouTube or Facebook or Twitch or LinkedIn as to how long these sessions last. Reason for that is because we're streaming in all of those places at the same time, but people are paying for the closed coaching session, a small $21 a month fee that they're paying for the closed coaching session, and we also have people that are accessing for free. So the question might be, well, what's the difference if you're paying for it? The difference is that for those that are paying for it, we will cut off the stream live to everywhere else and continue within that closed coaching community to give you guys access to more of our time in that closed environment where we can look more at your individual questions and things like that. In the meantime, for those of you that are watching in other parts and you're tuning into the free version, we make sure we do at least one trade in that live environment so you can see the methodology start to finish, get some trade ideas, at least one, as we go through those sessions. So that's the structure. Now let me make sure that we cover the disclaimers real quick. Of course, important to understand disclaimers for legal reasons, but of course also to understand that these kind of videos are demonstrations and therefore not necessarily an indication of how much money you'll make. Now, for those of you that don't know, my name is Becky. My email address is here. It is becky@traddictiv.com. So you can email me if you've got questions. There's also support@traddictiv.com where you can email if you have questions. And there's also a link, we'll go to here, which is tradewithufos.com/Becky. That's the link up here. And from this, you can set yourself up with a free Trade with UFOs membership if you don't have already. And then you can scroll down and ask questions here in a public environment where the answers will also be posted publicly so other people are learning from those questions and answers. So ideally, this is where you come to post a question. If not, no worries, you can email us. Okay, so what are we going to go through on the session? Let's just go through what the agenda will be. There you go. So we're going to look at the current market environment, as in what's going on right now. We'll look at a trade review. In fact, I'll tend to start with that. We'll look at a trade review and trade management. What has happened to the trades we've already placed from previous sessions? How would we be managing them, if at all? And then, of course, we'll look for new opportunities. So first things first, let's have a look at the opportunities we put on last time. Now, we put on XOP last time, which is an ETF for oil. So we put that trade on, I put the date here, which is very helpful for me, 30th of July 2021. That was the last stock session that we had. So we put it on this candle, 30th of July. This is when we put the trade on. The black line is our entry, the red line is our stop, and these green lines are our targets. Now, we got triggered the following day, which was the 2nd of August. That's the next trading day, was the 2nd of August. I'm just seeing maybe perhaps the lighting's not too great. Sorry if that's a little bit too bright. Let me see if I remove the brightness of my laptop. That might be a bit better. There we go, cool. So we would have been triggered on this day, which is the 2nd of August. We would have been triggered in here. Price came in, didn't quite hit our stop, came out on the same day and would have hit our target. So great. Within one day, we would have been triggered and hit our safety target, happy days. And then the next day, which would have been the 3rd of August, we hit our second target or our final target. So within the space of 2 days, we went from placing the trade to triggering the trade to hitting our safety target and then hitting our final target. Overall, complete profit on this trade. Now, the reason I've done it day by day is to see whether or not things may have changed in that time period where we may have closed the trade early. But as we see here, if I just highlight this here, we placed the trade 30th of July when we had a thick red dot, probability down. It triggered on the 2nd of August where we still had a thick red dot, probability down, hit our safety target and then hit our final target on the 3rd of August, which again, thick red dot, probability down. So we would have had no reason to cancel this trade whilst it was in, and we made a profit on this trade. So that's on XOP. Now, within the closed coaching community, we put on 2 extra trades. So we had XME. So let's have a look what happened here. So in this situation, we put it on again on the 30th of July. So we put it on when it looked like this. So we put it on this candle. Again, black line was our entry, red line was our stop, green lines were our targets. What happened is price came in. If we look at a smaller time frame, we'll see what happened here. So it was placed 30th of July around about here, and it got triggered on this dot here. So it got triggered on the 3rd of August. Now the 3rd of August was still a thick blue dot, probability upwards, so we still would have had probability up there. And then it moved up, and pretty much by the end of day on the same day, we would have hit, or actually middle of the day on the same day, we would have hit our safety target. Then what happened, as we can see, price then came against us and stopped us out here on the 4th of August, where we still would have had a thick blue dot, so we still would have been in the trade. We wouldn't have cancelled it at that point, but we would have, of course, lost that second half. So what that means is we would have profited by half of the trade, let's say 0.5, then we lost 0.5, so overall we made nothing. We made nothing, we lost nothing. That's the important thing, is that we keep our safety targets here for a reason, so that if this very thing happens, price goes somewhat in our favour and then against us, we don't lose any money. And that's exactly what happened here, showing how the safety target would be used. We then placed I'm going to delete that now, so it's gone from the charts. We then placed a trade on, there we go, Amgen. And this one worked out really well in our favour as well. So with Amgen, we had, again, we placed it on the 30th of July. So we placed it on this candle here. And price looked like that. 2 days later, it triggered. So 1, 2. So here we go. Oh no, hold on. There you go. It triggered on the 3rd of August. So it triggered when we still had a thick red dot, probability to the downside. So it triggered this point here, 4th of August, 3rd of August, and then opened up the next day down here, meaning we would have been filled on our safety target all the way down there. Now that's actually a really good thing in our favour. That gap went in our favour because price didn't come through this line, meaning we didn't take a profit here, we took a profit here. Meaning our safety target actually made us slightly more money than it should have, which is always good if it works that way in our favour. Now it hit our second target on the same day, so as the market opened on the same day, 4th of August. Now, as the market opened, we wouldn't have had a choice as to whether or not we made money on that safety target. We would have made money immediately. What we may have done at this point is also, if we'd have been watching the markets at that time, is also have cancelled the rest of that trade and taken the profit for this one a little bit early. The reason we might have done that is because, as we see here, the dot changed to a thin blue dot, meaning it changed, it's no longer a confirmed downwards climate, so it's no longer having probabilities in our favour on that day as price opened. So if you'd have been watching it as the market opened, you'd have opened up your charts, you would have profited automatically on the safety target. If you acted on it immediately, you would have also taken for profit at around about the same price that price opened up at, taken profit there. Either way, profitable trade. Perhaps you'd come to it a little bit later in the day and you didn't realise that the climate wasn't still in your favour, in which case, by the end of that opening candle anyway, you would have already hit your final target. So whether you took profits slightly higher or exactly at your target, either way, this was an overall profitable trade. So from the 3 trades we put on last time, we had 2 profitable trades that hit both of our targets, that would have profited in both of our targets that we had, and we had 1 trade that was a break even. So it hit the first target and then stopped us out, break even. 2 profits, 1 break even. Hopefully that makes sense. Now we've gone and we've explained all of that, and we've explained what happened. In fact, I'll keep hit this here. I might even see if I can try and go back and get the numbers for XME, just because I didn't update my spreadsheet, so I wanted it there to update my spreadsheet, but no worries, we'll leave it at that and we'll have a look at new opportunities. Now first things first, before we look at new opportunities, what we want to know is what's going on in the world that could affect us. So I've come to the FX Street economic calendar. I'm going to click filter, I'm going to choose United States because we're going to be trading US stocks, and I'm going to filter high impact news and apply my filter. And then what I'm going to do is choose the time frame. So I want it between now and next week. So between now and next week, we have news coming out today, later on today. This is in GMT, so that's already happened. So in which case, we don't have any news until Tuesday, where at 12:30 GMT, so 12:30 UTC as well, just an hour before British summertime at the moment, as well. We might see some news that could impact the markets. And again, on Wednesday, 6 p.m. GMT, we'll also have news then. So we may see some volatility in the markets in the middle of the week, basically, and we can choose to either avoid these trades, get out of the trades before these news reports come out, reduce our risk, or reduce the number of trades in order to not be so exposed to the potential volatility that we get from these markets coming in. So hopefully that's making sense so far, guys. Of course, let me know in the chat box. If anything doesn't make any sense, you let me know and I will explain it. But hopefully you're with me so far. So what we're going to do now is we're going to go to TradeStation and we are going to have a look at new opportunities. Now, before we started, I ran a scan. That's what we have here. Facebook and Google came back on the scan. This scan is looking for, essentially, it's programmed in at least some of our methodology to show us where we may have opportunity. And it looks like we do straight away on Facebook. So that's great. We'll get this trade in immediately. Let me just explain why we've come to that conclusion. I'm going to firstly double check here that I'm using 0.5. Brilliant. Okay, so with Facebook at the moment, what we did is we did a scan to come back and tell us where we have probabilities to the upside. That was that one in particular. Now, the reason we wanted to look to the upside, and perhaps I should have explained this firstly, is because the S&P itself has probability to the upside. We have a thick blue dot on the US stock market as a whole, which means if we want to trade stocks that are within the US stock market, ideally we want to trade the ones that also have probability up, because then you have the general stock market has probability up, as well as your individual stock that you're trading has probability up, and then we layer in other variables as well. So it just gives us that extra probability. So here on Facebook, we have a thick blue dot on our auto climate, probability to the upside, meaning we should be looking to buy. Now, we don't just buy anywhere. We want to buy where we have big stacks of buyers. Why do we want to do that? Because the only way price can go up in anything in life is if you have more buyers than sellers. So how do you ensure that you're getting into a situation where there are more buyers than sellers? You can never ensure it, but what we can do is increase our probability by buying where there's loads of other buyers. And that's where these UFOs come in and show us where they are. Now, we have multiple UFOs, so we layer in a third thing here, which is our EMA value from the bigger time frame. Our EMA value here is 361.03. So let me draw that on the chart. 361.03. 361.03. There we go. We can see that that EMA value is just inside our UFO, which is perfect, because as price comes down, if it comes down, then that EMA value might move down a little bit. But either way, price and the EMA are combining together within the UFO. Now, I know for those of you that are new, you might not understand a word of what I just said. So let me break it down real quick. When we're trading, we want to make sure we have multiple things in our favor. First thing is probability up or down, unless you're trading option strategies. But when you're trading directionally, you want to know if you have probability up or down, or nowhere. If it's nowhere, don't trade it. Change the market, change the time frame. But if you are going to be trading it, firstly, you want to know if you have probability up or down. That's where the climate comes in. That tells us we have probability upwards. The second thing we want to know, if we're buying, where do we buy? And we want to buy where there's lots of other buyers. So we use an app, the UFOs, that show us where the buyers are. But then what we also want to know is, do we have extra probability? The question of that comes in with our EMA. So we've got buyers, in this case, buyers, tick, and more buyers, tick, because people buy at the EMA. So that way we have buy orders pushing price up from the climate, buy orders coming in with the UFO at the exact same price or round about the same price as more buyers come in from the EMA. So we have three separate reasons why people are buying, which gives us more probability that people are buying, which means we want to be buying with them to have enough power to push the price up. Hopefully that makes sense. So this is the trade that we're going to use. So if we come back to TradingView and we'll put Facebook on the chart, let's have a quick look and see what we're doing here. So this here, by the way, was a trade we put on as well before. That was from June. That worked out very nicely. We would have had a trailing stop on this one that would have been stopped out around about this point, and we would have taken a bit of profit there. If you had further targets, then great, you probably hit them because price obviously moved up from this area, which is great. So this is the trade we're taking. It's this UFO here. We're looking at pretty much the exact same thing, just a different platform. Just gonna find it easier to place trades on this one, or at least to show you how to place the trades. So I've chosen this UFO. What I want to make sure of is whether or not we have a UFO in the way here, and it doesn't look like we do. So what we're doing in this situation is we're going to use this UFO here for our entry and stop. We'll also use it for our safety target, and we'll have a trailing stop for our final target. So the numbers that we're going to use are going to be coming from the app itself. So again, we're being really strict here, and we're taking the numbers that the app itself is giving us. So our entry price is going to be 361.20, and weirdly enough, that's where I happen to draw it. The stop loss price is going to be 357.13 because that's what the UFO is showing me right now as the bottom number. And what I'm going to do is just take away 10 pips worth of wiggle room, or 10 cents in this case. So it's 357.03. That's going to be 357.03. There you go. That's going to be our stop. So that's our entry and our stop. Now we want to know if we're right, where are we placing our targets. So first things first is our safety target, 361.2 and 357.03 on Facebook. Our first target is going to be the exact same distance away as what we have between our entry and stop. It's a one-to-one trade. So we can see here that the pips that it's calculating, in this case pips is the smallest increment of price, is 417. So our safety target is also going to be 417. So if you broke it down, you're risking 1 to make 1. You're risking 417 to make 417. Now we do that again so that we can limit our losses if we're a little bit right, but not too right. We're going to profit a little bit and then lose, meaning we break even. So we do that for a reason. Now I usually do it that I risk $50 on each of these trades because I want to make sure that it's a nice round number, easy for you guys to keep up with the maths. Of course, you will have different numbers that you use, and that's fine. You want to make sure that these are trades that you, let's put that to good to, yeah, you want to make sure that you are using numbers and risk percentages that make more sense to you. So we'll put that first trade in. What I'm also going to do is put a line in on the chart so we can easily see what's happening. So that's 365.37. So when we come back next time, I can easily say, did we hit the profit targets or not? Now our second target is going to be a trailing stop, meaning as price comes in and then moves away, perhaps it makes a new UFO. Yeah, like that. And then what we do is we take our stop that was here and we put it here. And then price moves up and it creates a new UFO. And we take our stop that was here and we put it here. And so on. And we keep doing that until we get stopped out. So we're locking in profit as we go until price turns against us. That's going to be the strategy for our second target. So in this case, what we're going to do is we're going to put in our price, entry price 361.20. Our stop loss is the same, 357.03, and we're not going to put in a profit target. I'm going to leave that unchecked. That way, again, we're just going to lock in profit as it moves. Make sure we're risking $50. So it's 50 on one, 50 on the other. Press buy. There you go. So I'm going to make a note here. So this was placed 13th of August. By the way, it's Friday the 13th today, guys. Hopefully you're having a lucky day. Placed 13th of August. What would it be? Final target, trailing. Okay. So we'll keep a note for that for next time. So that's the first trade that we've put on. This was Facebook. Just as a summary for those of you, again, that are watching live and you're watching on Facebook itself or on YouTube, or you're looking on Twitch or LinkedIn or wherever you're accessing this session for free. This is the session, or this is the trade that we would have put on in this session. Now, what I'm going to do just before I cut the stream, I'm going to just re-explain very quickly why we placed this trade. And I was asked a very decent question by one of our very committed traders that we're working with, who asked me to look at the reactive time frame to see how that works in real time. So we'll do that. Firstly, I'm just going to say We took this trade because firstly we had probability upwards, check. We had UFOs, buy orders that were close by, check. We also had the EMA from the bigger time frame coinciding with the EMA, check. We have room to move to the upside with no red UFOs on the way here, check. Trade placed. We have a 1-to-1 target for our safety target and a trailing stop for our second target. Now the reactive time frame is a slightly smaller time frame that we might use to help us be more specific. Now you can use it in two ways. In this case, this reactive time frame, what we've done is we've gone down a time frame, so we've gone from the 55 to a 21. If you're not using these time frames, the Fibonacci time frames, then you may use a 60-minute, and therefore you might want to drop to a 15 or a 20-minute to do the same thing. And what we see here, which is pretty great, is that we have a UFO, in fact we have two UFOs overlapping or inside the UFO that we're using. So even on different time frames, we have buy orders there. So that's great, because then we're adding this probability here. It's another check to say, brilliant, we have buy orders here. Now what we could do in this instance is say, okay, we have this UFO overlapping it, so let's put our entry a little bit higher. I won't, because I personally don't use the reactive time frame. You might not notice us use it pretty much at all. It's because it's an ultra conservative way of doing it. Nothing wrong with that. The more conservative you are, the less opportunity you have. The less conservative you are, the more opportunity you have when it comes to how strict you are with your trading, of course, is what I mean. So in this case, we're using the reactive time frame to go, brilliant, we also have UFOs here. We may also use the reactive time frame as a confirmation before we place the trade. Meaning, let's say price comes in and then it starts to move out, and as it moves out, it creates a new UFO. Creates more buy orders on its way. That's telling us new buyers are coming in, which gives us extra confirmation that that's going in our favor. And so what we would do is then place this trade. And we might still keep our stop here. We might be tighter and keep our stop there, but we're doing it based on buy orders appearing where we would expect buy orders to be appearing. If we expect that because of the climate, because of the UFO, because of the EMA, price is going to turn somewhere in between here, well, if we see it turn somewhere in between here and we see new buy orders come into the market, that's extra confirmation that we were right. The problem with that is that you may need to be watching it live in order to see that produce itself on the way out, which means you've got to be much more strict about looking at it, which is again one of the main reasons why we don't usually use this in our sessions, and we just go by the edge time frame, which in this case is our 55-minute time frame, and we use that to place our trade. So hopefully that helped with understanding how you might use the reactive time frame in a real life trade scenario. In this case, we used it to confirm that yes, we have even more UFOs in there, brilliant, and we might use it to watch it live as it progresses to give us confirmation again that we have buy orders where we expect buy orders to be, and then we place the trade from there. Okay, so that is our trade in terms of what we're doing live here. So what I'm going to do, I'm going to cut off the stream to Facebook and YouTube and the free places. For those of you that are watching in those places, hopefully you found this useful. You have a trade example that you can use here, a trade idea. If it fits your trading plan, then of course hopefully that works out for you. If you have any questions, email us, becky@traddictiv.com, support@traddictiv.com. We're here to help no matter where you come from. We're here to help. You can also go to tradewithufos.com/Becky. Get yourself a free Trade with UFOs membership. Come down here and post a question here so that I can answer it there, and we all get the same answers and the same questions. We're all learning together. For those of you that are watching within the closed coaching community, what I will do, if you'll bear with me, is I'm going to cut the stream to the live ones, to the free live ones, and we'll continue within the closed coaching session as we look for new trade opportunities. So give me a couple of minutes as I turn these things off. I need to do them one by one, so it takes a little bit of time. For everybody else, I hope you have a great weekend, a great lucky Friday the 13th. I'll be back on Monday morning for market commentary, so I'll see you then. Hopefully you have a great weekend and a great end to your trading week, and see you next time. Bye-bye to you guys, and for those of you in the closed coaching community, see you in a minute. I'm just going to close off the stream now.